guys, welcome back to a new video. Now today we are going to talk about the easiest way to trade support and resistance levels in the market. Now before we get started, if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, just let me know down in the comments exactly what it is that you would like for me to cover in my next video. Now today we're going to speak about what is the easiest way to trade support and resistance. Now we know the resistance levels is the highs of the market and support is the low of the market. Now one thing to keep in mind before we get started is the reason why the market moves so aggressive around these levels, because supply and demand levels is where the most liquidity is in the market. But the mistake that a lot of retail traders do is if the market prints level of resistance, what they do is they jump in at that spot. What the market does is then the market spikes higher, grab that liquidity, and then starts that move to the downside. Now today I'm going to show you a technique on how you can minimize that liquidity spikes in the market as well. Now I'm not going to do like a whole lot of examples. I just want to show you guys the concept, and then it's your job to obviously go back and apply and backtest, and just to go see on other pairs how you would have make use of this data here as well. Now we're looking at the Euro CAD, for instance. We're going to do 1 year because I think it's quite obvious that we have the structure that the market created here. So firstly we can see that this was a structural level. This acted as a level of resistance, right? The market came to test that resistance again. Now what we are going to do is we're going to pretend that that level did not exist. Okay, so we know that the market had now come to that level and it tested it and rejected this level over here. So what we want to do is want to look for selling opportunities to the downside. Now the way in which you get your target levels is you look for the last structure that the market created, which will be this level. So we're going to look for selling opportunities to this level. Now if you wonder how we're going to get selling opportunities, it's easy. You just drop down on the 1 hour time frame. What you want to wait for is for the market to create and break structure. Now this is the structure that the market had created. We can see how the market had broken below that structure. Now all you do is once the structure is broken, now it's important to keep in mind that you want to wait for the 1 hour candle to break and close below that level before you look for any selling. So this candle broke and closed. So what we are going to do is we're going to place a sell limit over there, and we're going to put our stop loss right about there for 1 to 3 because we're risking 1% to make 3%. Let's see what happened over here. So firstly we can see that the order got full there. I'm just going to let this run very quickly and see exactly what have happened. So there we go. So that's done. So that's just one simple example. Let me just stop this. Now the next example we're going to look at is the most recent example. Okay, it's a structure that was most recently created. Okay, now you can do this I forgot to mention this, uh, ladies and gentlemen, but you can do this up or down. So you could do this for those levels over there, and then you could do it for these levels here as well. But you would have never ever gotten it here because the market would have never created and broken structure because the market was quite bearish here. You would have put you could have looked for buys there potentially. Okay, that was not a level, but you could look for buys there and potentially look for short-term buys there as well. But now I want to show you guys the move up and the move down. So it's very simple. This was the level of resistance. This was the high that the market created, and you can see how the market came back to test that high there. So we're going to remove this red candle first of all, because we're going to just pretend that this did not exist. Now there's nobody that can argue with me that the price reacts off previous levels of resistance in the market all the time. It's just about making sure that you get in the market at the right time. So now what we're going to do is this is going to be our take profit level over here because this was the last level of resistance that the market had broken. So we can expect the market to come and test it as support. Now here we need to wait for the market to create and then break structure again. So the market had created structure over there, and now we're gonna wait for the market to break that structure. All right. So you can see here we had a clear break of the structure. Um, so now we are going to place our sell limit in there. I want to ride this wave all the way to the downside. Now, one thing to keep in mind, it's very important to see if the market creates new structure and breaks it as it needs to, well, as it's going to the downside. So we're gonna, okay, so there's no pullback, no pullback. Now, this is what I'm talking about, right? So the market never pulled back, but what you can see here is now the market had printed new structure. So this level over here, this is now going to be the structure that we are going to make use of, because this level here is now acting as support, and we expect support get broken and then be tested as resistance. All we do is we just bring our stop loss for that 1 to 3 over there, and let's see if the order gets filled. So okay, so the order gets filled, well, basically right away. If you want to, you can also sell at the current price. It really doesn't matter. This is a very low risk way of trading. So then we got the meltdown. Okay, so there we got the, eventually we've got the actual trigger, but we're already in the trade. So all you do is you let the trade run. If you don't have any patience, you can always close it if you feel that you've made enough money. There we get another test of that level. um, like I said, you don't need to hold this trade for this long. If you like, if you feel that you've made enough money, then you're more than happy to, to just close the trade out. But this is just for illustration purposes, so that you guys can see. There we go. Okay, so that was that. So this took about, this took about a couple of days to play out. So the easiest way to understand this is if I have to draw it out for you guys very quickly, just to make sure that you understand the concept, right? The first thing you do is you drop down on the daily, right? And then you look for support and resistance levels in the market. Once you've found a new level in the market, or a point of resistance or a point of support, that doesn't matter, then all you do is you look for um, you basically just look for structure that the market had created in the past, and then from there what you then do is you drop down on the 1 hour time frame, and then you wait for the market to create and break structure before you took in trade to the upside or to the downside. Now I'm very excited, and I'm looking forward to hear from you guys. While you go out there and do your own back testing. I've back tested this for about 2 weeks, um, not traded, but just back tested to see if it works. And this was probably one of the easiest methods that I found to trade support and resistance, and I just thought that I shared with you guys as well. Now you should enjoy your weekend. I want to say thank you for your time, and as always, cheers for years.